Good evening. This is the Elliott wave update for the S&P 500 and the NASDAQ 100 for Monday, March the 27th, 2023. Markets should remain extremely slow today, actually, in light volume. I shouldn't say too slow because we had some pretty strong moments of sell orders hitting the, market sell orders hitting the floor and buying sell orders hitting the floor, which did produce some nice little pops here and there. And if you were able to take advantage of them, you had a fairly decent day. If not, it could have been a more difficult day for trading. And a good day to exercise good risk management and to realize that maybe you just want to wait and not trade at all. So lots of decisions today. Now, as I presented on the update last night, that the markets were really kind of presenting a kind of a squirrely or a little bit different type of a pattern that actually could have just created an additional third ABC and to still be within second waves of varying degrees. And today the market, believe it or not, kind of put a little bit of a picture a little bit more clearer to me. And so I've relabeled accordingly. And it's basically still my preferred count that I carried over from yesterday, even though over in the NASDAQ and the cash market, I had changed it just to reveal what it would look like. That, by the way, has been changed. I'll go over that in a moment. But here, I can go over to the SPX, and it kind of made itself clear today. There were several points where I did start to get the feeling that they were changing the narrative a little bit. In other words, instead of the cash market, at least, instead of gravitating towards 4,000 for yet another day, in which case that's getting the cash above 4,000, and it would have taken the S&P to the future up to like 425, 430. And that was appeared like it was going to be on its way until that last hour. They ran it, and then it just kind of collapsed all the way back down and ended up closing below the strike price that was really developing here in the SPX, and that was 39.80. Closed below it. So it could be changing that narrative. Produced also what we're looking at as a possible falling three pattern here on the hourly and also on the 4 and also on the daily. So we got a little bit of a tighter negative happening right here now. So in the SPX, we're back. Minor 1, minor 2, minute 1, minute 2, minuet 1, and likely minuet 2. If this pattern falls through, the market should begin to basically collapse, move strongly lower. And we're seeing it on the hourly, we're seeing it on the the daily. So those are suggesting that, we might futz around here, but it should drop, and it should drop pretty precipitously because we've just presented a negative chart pattern, candlestick pattern, and then hopefully we'll get the follow through. Here in the count, we're back on in terms of we did not go up. We didn't break that one. We're not looking like we're going to break this one. So this remains in place for right now. Again, all of this upside activity is, I have to be honest with you, and the only word that comes into my mind is misplaced. And in terms of we're looking at the bond market, we're looking at the bond market struggle to try to keep bond prices moving higher. We're meeting with more selling, they're pushing it back down. It gets up to a level and they push it back down. I discussed it yesterday. It continued today. So the narrative of why the market should be up today, it was because there was another bank that bought the assets of Silicon Valley. So that the market wants to go, whoo, great. It's like, fine, but we knew that they were going to do that. That's what the FDIC was working on. They already had guaranteed everything to the depositors, et cetera, et cetera. So the market gave this kind of nod to the banking sector today, where we saw Goldman Sachs up 6 on the close here, we're up higher, JP Morgan up $4, et cetera, Citigroup up $1.58. So the market continues to just play, but now we're getting more serious tone to, okay, what is the bond market telling me? What is the dollar telling us? what are a lot of these other indicators beginning to say? I'm keeping the count the way it is. And so I am actually still looking for a pretty strong rejection of everything. So all of what we've been going through, what this continuation barter has turned into. Now, having said all that, I'm going to go back over to the ES. I will continue to leave open the upside folly to continue. One day does not a change make. It can happen for sure. At the level I'm looking at, it should drop pretty quickly. That would be the key. Again, we get it and then they reject it. We get it and then they reject it. We get it and then they really reject it. On nonsense, on an expiration play last Friday. So this was just the carry through, and it was like, oh. So if we just check out that pattern, it didn't break anything. It didn't change anything. So it's back on. If we continue to go up, we still have that resistance. 40.38, right now we still can consider 435, 40.38, 40.46, 47, and then we have 40.79, I think it was, or was it actually, let me go one there, right there, 40.74. So these all remain, and in reality, if I had to back it out, I would back this one out. But I'm not seeing it anymore. I saw the push and the pull being a little bit stronger. Light day, nothing really going on in terms of economic data. So let's go over quickly and take a look at the NASDAQ. So here again in the NASDAQ, I'll start with the cash market because that's the one that I did show the other. I have taken it back. So for the 5, the 1. So let me go out here at least to the 4 hours so we get a better picture. So the intermediate wave B is back in place. And that we have is 1, 2, 3, ABC 4, and a 5, and a minor wave 1 of the intermediate wave C. So this whole thing remains a minor wave 2. Dang close. We ran over, but guess what? I am going to allow it because a lot of it was on extremes. And so we come in just basically flat. So this is very congested, but it does fit, and it fits in terms of what's really happening. So the 4-hour chart, that's there. Then we get the 1 and the minor 2. Bring it back down to the hourly chart. There is the minor 1, and here is the minor 2. And we have the A, the B, and the C, right? Right there. So let me pull that up a little bit. Minor 1. Minute A, minute B, we had a nice 5 waves up. For a C wave, we put the minor 2 up there. Then I get a 1, 2, and then I get a 1, 2. Same pattern on the hourly, falling 3. But we're looking, right? That is a bearish engulfing bar, took out all of the bars, the green bars in the middle. Boom. So I would suspect that we get just below 639, we might go kaboom. So we shall see. That's on the cash market, so we won't know that. Over in the NASDAQ itself, we got a little bit different. We got the sub or the minuet ABC for the minute wave 2. So we got 1, 2, 1, ding, 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 starting to put in its 5. So it's going to be a minuet wave 1 of the minute wave 3 of the minor wave 3. So hopefully we'll be back on our way. That's what I'm looking for. It should happen quickly. We should break the hourly 200 without any real problems. Everything else is all tangled up in the trade right now. So we're not above the 50. We're not above the 20. We're not above. It's all tangled up in this whole mess, which does, again, really lean hard on Was it really bullish? Was it really anything other than sideways noise? That was sideways noise. That's it. And we label it as counter trend or corrective within the trend, which actually resumed here, got taken hostage, again within the context of a second wave. All of this, again, in the context of a larger second wave. And we can just keep going back and we can find all these wave twos all over the place that are just very painful because they throw all this garbage at us, right? Here we have an irregular B. Here we have an irregular B. And quite consequently, excuse me, that where I'm seeing a lot of this now in the wave two position and in the B wave position, both here and I'm seeing them in the bond market. So there's just a lot of, whether it's indecision, whether it's just kind of this craziness in between volatility wise, because a lot of these moves, this is Friday's expiration. This was back into Thursday where we did a run, and it was also a run for the roses because of that Thursday expiration, the 0 days to expiration options. So we're getting a lot of that. But hopefully what we start to get now is some additional adjustments taking place on a macro trader basis. You know, we get a little bit of that going on, because if they get a little bit more clarity on interest rates, if the bond market continues to flash that trouble in terms of bond price and yields will start to rise again. Rates going up again. What's that? So it just flips a lot of the narrative. Keep it all in mind. So count stays the same here as well, to be honest with you. Moving average is the same. It's all twisted up inside. And we come down and we smack and we get out of that pretty quickly. I'm going to leave it right there, because for right now, again, for tomorrow, I think we do have a couple of things coming out. Let me take a look right quick. We have the home price index and consumer confidence. Consumer confidence comes at 10 a.m. Eastern. We do have a Fed Governor, Barr, testifying to the Senate on the banks. That should be interesting, and that's also at 10 a.m. So we may have some serious kind of rollover, or everybody's going to try to grab for that brass ring again. Oh, the banks, they're talking about the banks. We want to know if the banks are safe. Boom, they are. Run, little algorithm, and it grabs for the brass ring. So again, algorithms are the ones that are in there, and there are ones that run on program, then they're running on the news. And how, whatever this Fed governor talks about with banks, all the click words, the phrases, whatever, if the computer interprets it as bullish, it's like it's going to run out and buy it. So, but anyway, we got a couple of things tomorrow, and then we'll just see how this all continues. That's where I'm going to leave it right now. Our next update will be on Tuesday, the 28th.